It is not news anymore that SpaceX will be included in the Nasdaq 100 on July 7. What's important is that the stock price may go down after the inclusion, because 39% of the shares will be available for sale very soon, which is 10 times more than the mere 4% float today. But even if the stock price goes up, there is a critical price point you need to know. If SpaceX trades above $175.50, more sellers will flood the market and cause the stock price to drop. In this video, we follow the money in order. When the forced buying happens, when the selling starts, and the one number that decides which side wins. By the end, you will know if July 7th is the last chance to profit from SpaceX stock. So let's start with the buying. And right away, most people get it wrong. They see a giant company and assume giant buying. But an index does not care how big SpaceX is. It cares how much of it is for sale. And almost none of SpaceX is for sale. Only about 4% of it trades. The other 96% is locked. So watch what that does. SpaceX is worth around $2 trillion. But inside the Nasdaq 100, it counts for only about 0.5%. Tesla is a smaller company and it gets 3 to 4%. It is not about the market cap, it is the float that matters. And the buying does not come in one shot. As more shares unlock, SpaceX's spot in the index grows and the funds have to buy more to keep up. A little in July, more in September, more in December. Sounds like good news, right? More buying again and again. But look closer. The funds only buy more because more shares are unlocking. And those shares unlock because insiders are finally allowed to sell them. The buying is chained to the selling. So the question that actually matters is who is on the other side, handing those shares over, and when. I have already mentioned that as of today, only about 4% of SpaceX can be traded. That is the whole pool. Now look at the schedule almost nobody lays out. By September, up to 21% of the company could be free to sell. That is more than 5 times what trades today. By December 8, all the SpaceX insider shares will be unlocked. About 40% of the company will be freely available in the market in under 6 months. Now, one person is not on that schedule. Elon. He locked his own shares for 366 days, all the way to June 2027. No early exit, he wrote it into the deal himself. Think about who gets to sell before him. The employees, the people who built the rockets can start selling in weeks. The founder who holds 82% of the votes cannot touch a share for a year. You can read that two ways, and I want to be fair to both. Maybe Elon is telling you he believes, so he locked himself in the longest. Or maybe it costs him nothing because he never needs to sell. He borrows against his shares instead. Both can be true. But put the two schedules side by side. The funds are forced to buy more as the float grows, and the float grows because the employees are unlocking. So the funds are mostly buying the shares the insiders are handing over. The forced buyer and the forced seller meet at the same door. You might be thinking,
does a wave of selling really drop the price?
There is an actual answer. Two finance professors, Laura Field and Gordon Hanka, studied 1,948 companies coming off their lockups. When the shares unlocked, trading volume jumped about 40% and the price tended to slip. And it slipped harder when the early investors were the ones selling, which is exactly who is selling here. The people who built this company are cleared to cash out on a fixed calendar. And the buyer on the other side at whatever price is you. So the flood is bigger than the buying. But maybe you are still thinking the buying wins anyway and the price would climb eventually. Now, let us look at the trap hiding inside that hole. Even if SpaceX goes up, it works against you. And this is the part no other channel is telling you. The S1 filing spells it out. If SpaceX closes at least 30% above its IPO price for at least 5 out of the 10 trading days before its first earnings report, then a batch of shares unlocks early. Up to 455.8 million of them let out ahead of the 180-day schedule. Now do the math. 30% above the 135 IPO price is $175.50. And 455.8 million shares is about 10% of the lockup. So if SpaceX trades above $175.50 into earnings, another 10% of insider stocks is free to sell. Read that again. The higher the price climbs, the more sellers it lets out. Strength does not protect this stock. Strength arms the people waiting to sell it. And this is your opportunity. Ask yourself, do the insiders want to sell early? If they do, they will fight to keep the price above $175.50 before earnings, which happens in late July or August. So if you see SpaceX trading below that line, you know what that is telling you. Quick one before we go on. If SpaceX is sitting below $175.50 a week out from earnings, are you buying, waiting, or staying out? Tell me in the comments. I read them. And if the content is useful, hit like and subscribe. So that is the setup on paper. Buyers first, sellers right behind. And a rally that only fits the selling. But paper is paper. Has this actually happened to a real stock? It has. Twice, and one of them looks a lot like SpaceX. The first one is ARM Holdings. It went public in September 2023, and only about 9.5% of it was free to trade. Its owner, SoftBank, kept the other 90%. A tiny float, a lot like SpaceX. Almost everyone expected a crash when its lockup opened, but SoftBank did not sell. With no flood of supply, the stock held. It went up about 64% over the next year. That is the case for staying in. A locked-up owner can hold a price up longer than the bears expect. Elon is locked into 2027, just like SoftBank was. The second one is Rivian, another hyped debut. It peaked within days of listing, the same way SpaceX peaked 4 days after it opened. Then its lockup came. The stock fell more than 20%, and over 6 months it lost about 82% of its value. Same setup, two very different endings. That is the owner's picture. Now, I know a lot of you believe forced buying always pushes a stock up. It sounds right. But two researchers, Robin Greenwood and Marco Salmon, tracked this for decades. The pop from joining an index has been shrinking. In the 1990s, it was about 7.4%. In the last decade, under 1%. Almost nothing. The forced buying everyone is counting on is the weakest it has ever been. And there is one more thing the excitement is ignoring. The space sector has already peaked. Rocket Lab hits its high on May 27, 2026. Virgin Galactic, a stock stuck near $3 for 2 years, ran up $9 around June 1st, then fell straight back to $3. When SpaceX listed, money did not pour into space. It poured out of every other space stock and into this one. SpaceX did not lift the sector, it drained it. So the buying is fading, the selling is building, and the sector is cooling. But if the money is leaving the space industry, it has to land somewhere. Where does it go next? The answer is already lining up. Right after SpaceX, two of the biggest listings in history are coming for the same money. SK Hynix lists around July 10, raising up to $29 billion. That is the largest listing of its kind ever. And Anthropic is aiming for around October, maybe the first company to go public worth $1 trillion after SpaceX. The market only has so much cash and it moves around. So here is where I stand. I'm not telling you SpaceX will crash. I cannot predict the exact move, and anyone who says they can is just guessing. But I can see the shape of it. July might be the last easy window. After the Q2 earnings unlock and everything that follows it, there are only more sellers, not fewer. And a stock does not spike into a new high every other day unless a real catalyst shows up. Right now, I do not see one. 3 things to watch. 1. Whether SpaceX holds above $175.50 in the 10 days before its Q2 earnings. Above that line, more sellers unlock. Strength is the trigger. 2. The July 7th open itself. If the stock is already running up into that day, the buying is already priced in, and there is little left to push it higher. If it is flat, the demand is still ahead. 3. The next Nasdaq index rebalance, around September 18th. Watch whether the forced buying steps up as the float grows and whether the price absorbs the new supply or sinks under it. There is a cheaper way people are trying to own SpaceX without buying SPCX at all, a backdoor through another stock most people are ignoring. I broke down exactly how it works and where it breaks in this video. It is the one to watch before you make any move here. Click here to watch it now.